When you're investing in property, cash flow is everything.
How does depreciation affect CGT implications? Does it?
It does, yes. Claiming depreciation does have its setbacks. If you buy a property for $700,000 and you claim $10,000 of depreciation, your property is essentially worth $690,000. If you sell your property for $700,000, you've actually then made a gain of $10,000 because you claim $10,000 in depreciation. It's actually reducing your cost base. Where is the benefit then if I'm paying CGT? And this is not tax advice, but it's essentially my experience. You claim the full 100% as a tax deduction. When you go to sell the property, if you're an individual and entitled to get a 50% CGT discount, you're only paying back 50% of what you claim. So that's where the benefit is when you're investing in property. Cash flow is everything. Being able to claim it upfront 10 years ahead of before you sell it, why not?
Yeah, so depreciation is actually a non-cash component. So especially if you have a big bank loan, you can fund it through the banks and you can actually have something that's cash flow positive where it makes you money. And then because of the depreciation, there's a tax loss. With the CGT discount, it's not just individuals, also trusts. Obviously that is because then it flows into an individual will be able to access the CGT discounts. The way it does work is that your depreciation, you get the benefit of that completely upfront, and then it is an add back item. But because of the 50% capital gains discount, if you can access that, then that is where sort of the tax benefit happens. And also, fingers crossed, we expect the tax rates to drop in the future. So we can get the tax benefit now when we're paying more tax. Then in the future, when we go to sell it, hopefully our tax rates will be lower. This is evidenced by the stage 3 tax cuts. If you were to get the depreciation now when you're paying 34.5% effective tax rate, but then in the following years when you go and sell it, that 34.5% that you would have had to incur, you can now actually just pay at 30%, which is a new tax rate after the stage 3 tax cut. So you'd save 4.5% on that. With the 50% capital gains discount, then you'd save even more.